Hi, this is Chmelauskas. I'm the CEO of Camino Corporation. Camino, we're acquiring a fully permitted for construction asset in Peru, which would be our first copper build. And then we start drilling our Los Torpedos, a copper asset in Peru at the end of January.
Right, Jake, good to have you on the show. Right, let's start with you. Yeah, what's your background? What have you done relative to what you're trying to do today?
Yeah, so I've been in the business for, about 30 years. The last 20 years, it's been developing assets like Camino. We try to get in front of a commodity cycle at the right time. We've done it in gold in China. We've done it in lithium in the United States and in Argentina. And now we're here in Peru and Chile, which I think are the best copper jurisdictions in the world to do it in copper.
Okay, and who's helping out? Who's on the team?
So a lot of the team I've worked with historically, like I said, over the last 20 years. Our CFO joined the company a year ago from the Ivanhoe Group. Tried and true operator and mine builder, Dave Baker. I've worked with Olga on the communication side for 10 years. She's with us. We've just added Chris Adams, who came out of 35 years at Macquarie Bank, onto the board, and he's going to help us with the debt financing as we go forward here. And then there's other people around on the business, guys like Ken McNaughton are on the board, Ewan Webster in their own right. They're building mines and have history of developing projects in the mining space.
Okay, so like we're chasing copper. Good time to do so. Let's start with.
I think it's an excellent time to do so. Yeah, I mean the market's at a bottom. This is where it is an excellent time to invest in the space, and I think investing in small companies like Camino that have a business plan and that are going to come out with production. I think that's a really good place to be, and we've demonstrated this in other commodities.
Right. Okay. So, look, you've had some success in the past. Tell me about the setup here. Like, so we're going to get into the acquisition and with regards to getting into construction and production, and then we'll talk about development and exploration as well. Between Chile and Peru. But what did you start with? You start with a big idea, but what were the first sort of assets that you?
Well, I think we started with
and
the
how
commodity.
do you build on those?
Yeah, we started with the commodity copper. We think that copper will have its next cycle there based off of electrification. We saw copper go through a cycle, the China cycle, 1999 to 2011, and we see a similar price move in copper, going forward. So that was the basis for let's get into the copper business. Where do we go? We go where the geology is the best. Right now the best geology for copper happens to be has always been Chile in terms of endowments. Peru is number 2 behind that, and the DRC has now popped up to compete with Peru. So those are your best jurisdictions, and we've chosen to be in them. And basically we found Camino as an underpriced asset that Ken McNaughton, one of the founders of Silver Standard, had put together. He made a discovery drill hole in 2017, which took the value of the company to over $100 million, up to $150 million. And then it all came back, as can happen in our business. And so it was a mispriced asset that I invested in. I brought in a partner to help me. The two of us came in together, I guess. And then the last 5 years, what we've been doing is on this strategy of finding an acquisition to buy that we can put into production, because I've basically found my success on the development side of the curve, which is going into production, and I think a producing asset at the right time in the copper cycle can create a lot of value. And I'm talking about company building. This is where if you go back to even Antofagasta copper, 30 years ago, they bought their first asset, which was Bachilla. And from there on, they continue to build a business. So that's how we position ourselves. And Camino was first acquired based off of this project Los Torpedos, which again we're going to start drilling at the end of January.
Right, but do you think obviously it all shot out of the gate in 2020? Everyone was making good. There's a lot of money swishing around, and I think most companies were the beneficiaries of that kind of euphoric perception of what was going to be. and everything then came off again. That kind of creates a bit of difficulty. So with Los Chapitos, obviously it's an exploration play in a slightly tougher market. It was going to be tough on its own. So talk about the thinking about bolting on these sort of the new potential production project that you're going to do. Did the business model need to change because the market was not rewarding sort of typical exploration?
Yeah, you're right. I mean, the exploration wasn't being rewarded. But having said that, we went into this business always with the vision to buy the asset that we're purchasing now, Puquios. And we've gone through this. And when I say that, we've had pencils down over the years. I mean, we've been unsuccessful on some acquisitions that we've gone after. They haven't gone away. I mean, they're still within reach, in the future. But Puquios is the one that we were able to sign definitive agreements on and bring to the finish line here in the new year. So that's always been our strategy. And what I'm trying to do is reduce the geological risk, reduce the engineering and permitting risk, and really what I'm trying to do here for myself, but I'm aligned with shareholders, is reduce the timeline, to value creation. And with an asset like Puquios, we can be in production in a matter of years. In 2 to 3 years, which I think is very important from a timeline standpoint for shareholders that are looking for value creation. In the backdrop to that, we are drilling, and we do have that speculation discovery opportunity in front of us. With our drilling in Peru, and to your point, I mean, as we've developed, since 2020. It has been hard, and it is a hard industry right now, which is why it's a good industry to invest in. The opportunities are there. We can buy assets like this, and this is the best thing to do at the bottom of the market is to buy assets. It's the best thing because you can buy cheaper than you can drill, so to speak, right? Now it's nice to hit a nice easy drill hole, and the market runs with that, but you can buy assets cheaper than you can drill them now.
Right. Let's talk. Let's talk about this, Jay, because it's really important. Like you're in a sub $10 million market cap company. Okay, so exploration, lots of cash-stranded exploration companies globally, right? So let's focus on Chile, and we'll come to the development exploration in Peru in a second. Okay, we'll come back to Los Chapitos. So Puquios. Why did you win this bid for this thing as a sub $10 million company and not, other people with bigger balance sheets and, the ability to, maybe move this thing through the phases as well? How did you win it? And, is it as good as you think it is?
Yes, there was a process that was run, for the asset. What we brought to the table, and I think this is what helped us win the asset, was a partnership with Nittetsu Mining. Nittetsu Mining is an excellent Japanese miner. They mine the Atacama Kozan mine in Chile. They're building a $400 million mine right next to Puquios, about 50 kilometers away, called Arqueros. And Nittetsu, to your earlier point, happens to be our partner in Peru as well. So during these lean times when it was difficult to go to market and the cost of capital was against us. We brought in Nittetsu. We created a nice relationship and friendship with the group, and they're investing $10 million in Los Chapitos to earn a 35% interest in that project, and so that investment is up to $7 million now, and every 6 months, the geologists at Nittetsu, and then our consulting geologists out of Chile and our own geologists in Peru, we look at the asset, we decide whether it's worthy, to invest another $1.5 million from Nittetsu. And if the answer is yes, we keep going, and the answer has been a resounding yes, as of last, a month ago, where we received another $1.5 million from Nittetsu, and that goes right into the ground. The 95% of that funding goes into the ground. And so we like it. Nittetsu has come in and invested into Los Chapitos, and then lo and behold, next to us, Rio Tinto has stake ground last year. So there's definitely a nice exploration asset in Los Chapitos that gets vetted and verified every 6 months.
Right. Okay. So you bought this thing from Denham. Nittetsu themselves have committed just to break down the deals 50-50, but they're throwing in most.
So it's
the cash. So what does it look like?
Yeah. So it's a 50-50 deal, right down the middle, and which means that we get 50% of the offtake as well. What we've to win this deal, as I was mentioning, having the partnership with Nittetsu brings in 50% of the purchase through cash, and we provide 50% of the acquisition through stock. So for Denham, which is a PE firm, it's good for them because they get half of their investment, sale in cash, and then the rest they're fully aligned with Camino in the stock. And what they want to see is re-rating in terms of production, and then a re-rating in terms of operational cash flow and cash flow multiples.
And they get an NSR as well.
And they get an NSR. You're correct. Yes.
Okay.
Yeah.
Okay. So it's fairly standard deal, and there's no sort of kind of acute components here. No danger of this thing getting away from you.
No, that's right. And the other piece to the partnership with Nittetsu and Denham is I'm the operator until we make a production decision, i.e., we get our debt financing and our equity in place to build the mine. And once we make that decision, which we think we'll make in 2025, then I pass the baton over to Nittetsu, and Nittetsu is going to operate. So Nittetsu is going to build, and Nittetsu is going to operate, which helps us with our overall strategy. You mentioned, the team earlier. It frees up our team. We'll still have, our chief operating officers and whatnot, monitoring and helping, with the build. But it frees up our ability to go off and continue to company build.
Yeah. Okay. So you're going to have this in the back pocket, as it were, in a safe pair of hands. Just want to make sure I'm not drinking the Kool-Aid here. It is clearly Nittetsu have gone through. This is a DFS stage, right?
Correct.
Right. So there's a DFS, and you're going to redo a 43-101 component?
Yeah. So we're just updating a 43-101 technical report that'll be completed at the end of January, and that will go into our circular in order to close the deal. So that's the final piece to close the deal.
Okay. So Nittetsu, what was the DD process there for them? How long did that take? Because like Denham Capital, I come from the banking space. I wouldn't rely on what Denham necessarily say or know about this thing. But Nittetsu Mining, I am very, very intrigued to see what they think. So what was the process, and what were the conclusions at the end of this?
Yeah, well, first with Denham, they're a $12 billion PE firm. So they do things to the high standard and are the best groups you can think of. The one person that I didn't mention is Marcelo Bruna, who is the operating officer down in Chile. You may have met him. Very impressive guy from Puquios. So he's handling the project on behalf of Denham and Camino and Nittetsu as we speak. Outside of that, Denham worked with and hired, in fact, it's Osenko that's doing the work for us right now, the PFS update, and name brand groups under Osenko as well, Moose Mountain and others. Denham also had Hatch do a peer review with the original report, which we reviewed. We agreed with their conclusions, and their conclusions were no fatal flaws, and the project looks good. And then the DD project process, which was a combination of Camino and Nittetsu, took about 6 months last year. And we went through, the project from top to bottom. It checks out.
It checks out. Okay, right. I know it wasn't your DFS, was it? Are you using someone else's?
Yeah, it was Osenko did the DFS.
Right, okay. But you didn't commission it. It was commissioned by Denham, right?
Correct.
Right. Okay. So you're not really allowed to kind of talk about, I guess, the economics around this till the 43-101 is done. Where could people go to look to find this DFS to be able to get a sense of what the opportunity could be or do we need to wait till?
Yeah, I think just wait.
whenever the
There's
431
nothing's
comes
been
out?
filed. You can see old reports from previous companies, but you get a sense of the size, of the project. But
Okay, so what's the timing on the 43-101 then?
sorry. Timing it will be the end of January. Yeah.
Okay, so not long. Okay, we're nearly there. Okay, okay, fantastic. In terms of once we sort of understood that there's a kind of process to go through, which to get funding in place for the build of this thing. What does the time frame look like? You've indicated earlier it could be the next sort of 2 to 3 years. What else needs doing? The build period is going to be 24, 30 months of that presumably. What else needs doing?
Yeah. So we need to. The project is ready to build tomorrow. Okay, and Nittetsu would like that to happen as well. Now there needs to be some detailed engineering outside of the DFS. So that needs to start in earnest, and then Camino on the financing side, and Nittetsu, we have to put a debt piece in place, and then we can put the equity to work. That debt piece will take 6 months to a year. Okay. JBIC, which is the Japanese Bank of International, Cooperation or Commerce, it'll take them 6 months to 12 months on a project like this to provide the debt financing. We'll also work with some Western banks, which can do things faster. But that's the main timeline, is getting the debt in place, and then we can top it up with equity. And then make a production decision.
Right. Okay. Broadly, can we just talk about the type of project it's going to be, if you don't mind? So you talk about the ore body or however you want to come at it. But I'm trying to understand the simplicity or the complexity.
Yeah. So it's an SXEW project, and I should also say historically, the project was first brought to me before I even met Dano through a geologist that I work with who. Is well known in the industry, and he did the first geological resource on the project in 2012. So I knew the geology was good and robust, and obviously they did some more updates since then. And then we carried on with our DD after that. So there's a bunch of data points that I look for, that put it into the right category for us. Sorry, I lost my train of thought. What was it?
What I'm trying to get at is like an investor looking in this thing, like, and hopefully when you do the 42-1, I think.
So it's an open pit. We're basically mining the enriched zone of a porphyry system. The porphyry system was looked at by Freeport, 20 years ago. It's a big system. They put adits into it. That's the sulfide. We're mining basically the enriched chalcocite-oxide on surface. Historically speaking, I guess we could talk historically with the DFS work, but it's a mine that mine life of over 10 years, up to 14 years. That's not including any local ore that we would bring in, from local miners. The size historically of the mine would be, it's about 9,000 tons a year, of production historically. So we still have to demonstrate that in 43-101. And then we're buying it for 45 million Canadian. Which upfront is about 20 million, 10 million from Nittetsu in cash, and 10.5 million from Camino in stock. And we're buying it at a valuation of about 0.3. But most of those payments, whether it's stock or cash, are backloaded, to when we start production and a year after production. So I think it's priced right in this market. We're going to use $4.25 in this iteration. The previous work has been done at about $4 copper. We think it shows well, at these prices, and in a higher copper market, I think the project will do very well in terms of cash flow and provide a long life asset. When I say long life, for a small company like us, that is a long life to be able to build a company off of. And there is upside on the project too. I mentioned this oxide, chalcocite enriched portion that we're mining with an open pit. There's also a large sulfide resource below. And we've done a lot of work with a technology company, Nova Mineralis, and spoken to other groups that are into sulfide leaching technologies. And so the upside on this project would be twofold. One, it's engineering upside in terms of applying new technologies. But number two, it's exploration. Having said that, all the work that we're bringing forward here and what we're basing our acquisition off is just base case, vanilla, sulfuric acid, chloride leach, business.
Right. Okay. And like I say, I won't get stuck into the detail too much. We'll actually see more when the 43101 comes out with regards to maybe how you start putting some economics around this and some reality around this. It's just remind me. So the grades are sort of in the range.
The grades are 0.5, and so
okay.
Copper project that's pretty good. And if you look at the overall grades of the industry, it's comparable with the overall grades now. Right, that's the new.
0.4 is the new world average, it seems, for copper. Okay, so you're that's good, and then you will get a sense of what the size of the oxide potential is, and then how you kind of get after the sulfides later. So for now, it's 100% focused on let's get this thing into production. You're not looking to spend money on exploration at the moment. It is what it is.
That's right. Yeah. And I guess the point here is these projects are doable. We don't need. We brought in Nittetsu Mining as a partner for the cash component, but we don't need. These aren't major $1 billion projects that take 17 years to build. This is ready to go. It's ready to go. So add capital and get copper out of the ground. Which is from a timeline perspective that's very important to me personally. To build a company. And I think it's important to shareholders, and it's also a very rare position that we're in here. I can't think of. We're looking at other projects, but I can't think of too many other projects that are in this position.
Yeah, no, it's interesting in terms of the kind of speed to market, and I think we've seen a lot of people changing their business model to recognize that pure play exploration is not getting rewarded. So maybe how do you move the needle anymore? And near-term production seems to be the solution. So this is really interesting for sure. Hey, I'm just conscious of time here. Should we bounce over to Peru and talk about Los Chapitos? What do we know about it today, and what are the plans? Can you remind us what the plans are?
Okay, so what we know is we've got an internal resource. It's not quite big enough right now to build a mine around, but it's comparable to what we're doing down in Peru. We think we need to double, the size of what we drilled before. So if you go to our website, you can see that we've had, exceptional results in a zone called Adriana, and nominally, 80, 90 meters of, 0.8, 0.7, 0.9% copper. Within that, you get hits of up to 5% copper, and so that we carry grade on this project. So what we've been doing over the last several years, and with Nittetsu, is stepping out. And when we step out, we don't step out, 50 meters. We step out 2 kilometers, 3 kilometers, 1 kilometer. And when we step out, we go to places like Lourdes, which is 2 kilometers from Adriana. We had more. You have to go to my website, but 55 meters of 0.9% copper, that kind of stuff, right? At surface. 30 meters of 2.58% copper. So those are good numbers, and so what we're doing is we're stepping out to find that next discovery, where basically redo what was recognized in 2017, and so this last year we spent a lot of time on geological mapping, and we brought in new set of eyes, a new set of experience from Chile that have identified these copper silver deposits in northern Chile, and what they're seeing with our rocks is very similar. In northern Chile, you've got this formation called the Black Formation, La Negra, and in Peru, it looks like chocolate. It's brown. It's the same formation, and what we're seeing within that formation are the same types of breccias that carry the copper, the same type of porous geology that emanates out from those breccias that carry these mantles. And more importantly, we've recognized major structures, because a lot of these big deposits are hosted along what are called deep-seated structures that go right, to the center of the earth, right down to the mantle. We've identified at least 2 of these structures on our property, and the one that we're drilling now in January is called La Estancia. Well, La Estancia extends for 12 kilometers along our project. It goes off of our claims, and lo and behold, that's where Rio Tinto has just staked over this last year. So we start drilling this. So we went and mapped. We found more green copper at surfaces. This project is target rich. When you go out and see it, and I suggest you come down, it's a nice visit. You see a lot of green copper all over the project. So the key is to find where it's going to bulk out, and put the drill where the metal is, effectively, right? And so what we're doing is we've got 11 drill holes. They're all targeted to cut across a breccia or hit a manto, and those targets are based off of field work the last 6 months. And we did trenches. We took in excavators, and lo and behold, there we uncovered green copper. So we just don't know how big it is. And this is where we put a drill hole into it. And I mean, this is the exciting part of the business. But what we're seeing has all the same characteristics of a lot of these deposits, including Michia, which was how Antofagasta started in northern Chile. And we're applying that knowledge to very similar geology, the same geology in Peru.
Right. So coming back to, I guess, a little bit about the observation about what the market is rewarding and what it is not rewarding. Do you feel under, 26,500 meters drilled here, presumably all by yourself? None of that's historic, right?
Well, it is historic from 2017.
Okay, from 2017, right? Okay, so do you feel any pressure to kind of like work out how this thing hangs together and kind of maybe start building out that resource? Because I know it gets exciting, and believe me, I know geologists get very excited about drilling, but at some point you need to kind of start hanging some economics around this thing. How far away from that are you right now?
Yeah, so we've already done that. I mean, we've done internal block models, resources. We've got that. We've got that in place.
I don't have it though, do I?
No. Well, no, that's right. And so I mean, and so we need to, if you look at Adriana, I mean, you can kind of, you can block that out. You can see, a resource of tens of millions of tons here, and we need to double that. We need to get this to 40 or 50 million tons, and I think we're halfway there. I guess that's, to put it that way. And so our target is, once we can hang economics on this, which is to find another 10 or 20 million tons, on the project, then we're going to have a project which looks very similar to Puquios, we think, which is the acquisition that we're buying in Chile. Having said all of that, the fact that Rio Tinto is staked next to us, they are not there for a 50 million ton deposit. They're there for a 500 million ton deposit. So every time, but we're here, like I said, everything we do, we're trying to put it into this framework of it's doable. Like we can build a mine here. And what's doable are, the most cost-effective way to put a copper mine in production is through TSXV, solvent extraction, electrowinning, mining oxide coppers, right? And so that's our first target. Now, every one of these targets, every one of those 11 drill holes that we're going to drill in January, below that is a sulfide body, and any one of those, this is what we don't know. I mean, whether this major structure that goes to the mantle is going to host a major sulfide body, which continues to expand at depth. And if you look at many projects. In Peru, it's Rural Condestable. Rural was a small mine, Condestable was a small mine, and then they connected, and they got a very large mine, below it now. Candelaria started the same way, 2 small mines, and then, they drilled below and turned it into a billion-ton deposit. And so, this is what we're starting with at surface. We've got these oxide deposits at surface, and the question is will they connect into a Rio Tinto-sized deposit at depth? And that's the speculation. That's the exciting part of our business, where you can wake up in February, or March, I guess, when we get our assays back, and suddenly this company's in a completely different different world. And that's where exploration works, on a major discovery.
Yeah,
right?
for sure. I guess what I want to get at is the kind of also the heart of how do we, the market, value you, right? I say slightly less than 10 million market cap today. We've talked about what's going up in Chile. I think that sounds pretty darn interesting. We'll wait to see how that moves through the phases. With this, you started off with a kind of, well, with Nittetsu were in there, 35%. Position here, I presume, is that right?
Yeah,
because you've got 65. The split looks something like that, right? And they put in something like $9 million, or committed $9 million bucks. Is it? Yeah. Okay.
I think if
So they're funding, and you're operating it to a point similar to Chile. What? How do you think we should look at the value you're creating by using this type of model to move things along on the ground, operationally, explorationally, and how do I value that?
Yeah.
Are you giving away too much of the upside? Do you think that was the market's thinking?
Yeah, I think there's just a couple ways to look at this. One, the industry really is in an all-time low, so it's a good time to look at the mining industry. Just so that's the first check box. Number two, I mean, you can look at our share price, and we are at a low. And you'll see that I am personally making a large investment in the company here. And
which means what? What does that mean?
Well, we're doing a financing right now, and I'll be taking about 10% of that financing. Right. So we truly believe that this is a value creation opportunity here. At the right time. And then number two, you can just look at some of the. We're buying these assets at. In Chile at about a 0.3. Again, it's backloaded, so 0.3 would indicate a 3-time upside. In terms of the value of that asset at a certain copper price. Obviously, if the copper price goes up, you get that rise there. And so and then on the exploration side, again, if exploration comes back and we get revalued, where we were historically, and you get with positive results from this exploration campaign. This is all value add opportunities, and I also think that our exploration assets, which don't get a lot of value now, will be revalued in light of the fact that we're building a mine in Chile. And then we call our asset in Peru number 2. It's the second project to be built. And so when you can see a company with a portfolio, and we've worked hard at creating this, a portfolio where you're building an asset, you've got a number 2 ready to go in place with the right operating team and all that, to build, subject to the exploration, work that we're doing there. I think you can start to see that this is a company building business and exercise. And you mentioned the team right out of the gate. I think we've got we're motivated, we're interested, we're having fun. This is the fun part of the business, even though it's been very hard. This is an excellent position. The company's well positioned, for to capture this copper market.
Right. Okay. So you're hitting this copper market timing right. We would both argue that one for sure. Is the model, you think, understood by the market? Do you need to do more? Will there be more coming on, or do you need to get head down and get focused? How do you think about it when you're chatting with the board?
Well, no, I think it's head down and get focused now. Definitely, we've got to get our debt facility in place. So a lot of that is going to be financial management going forward here to build a mine. We're entrepreneurs, so. You can see. We're laser focused on building this portfolio, and we're also prioritizing things. We've got other assets in the company that we are prioritizing. Behind. We're not even talking about them today until such a time as the market's there, and then we've got other things that we could focus on if the market is there to finance them. But we're always working on other assets. In the background, but to your point, yeah, we are laser focused. We've done it before. My first mine that I built was in China between 2003 to 2008. It's one of China's largest gold mines now. So when we get our teeth into something, we're gonna build it, and we've got that now with Camino.
Okay, so the step change for you, step change moment for you, I should say, that investors, current and potential, should look at would be what in 2025?
Yeah, so 2025, a debt facility in place, decision to build the mine, and equity going into that build. And so then we're firmly on the Lassonde curve of construction. That's number one. And then number two, exploration success at Los Torpedos. Some nice results, from these drill holes that are coming out now. And a success for us would be, if we're doing 11 holes, would be, copper hits on 5 or 6 of them, to follow up.
Okay, well, we shall watch with great interest from over here. Jay, really appreciate your time today. Nice introduction to the company, and like I say, it'd be great to have you back on, and when you get that 43-101 over the line, and we can pick it up from there.
Yeah, I appreciate that. Thank you, Matthew.